review. We have a live trade here today, just posted about 10 minutes ago. Ches short. Now, once you post or enter your trade, you then go post when you enter Ches short, you put in the price, and this is to be done immediately after you enter your trade, and then you can go back and get yourself squared away. Normally what you do is you enter your trade, set your stop loss 50-50, and then you come immediately here in the 10 trade review and you post what you did. Now, once you finish, you take your banner, reply to your own posting so that it's connected so that we can see the results. Like here, API short. This came here, here's the result. I can click on the earlier post that he made and it takes me to where he posted correctly. And then once he was done with his trade, he hit reply to that and posted his banner. So we know that he hit his 63%. So let's go down here and take a look at the current trade, right? So I can take a look, and at this moment here, I know he just entered at 834. I can go to Ches. I can look at 834, and I can see that somewhere in this moment here is where he entered. So I know his entry is 12.815. So we have that pinpointed. So I have that marked as his first entry, and then his second entry on the other side. Now, what we were talking about is, what are some things that we can do to protect ourselves? One of the main things that we have is what we call a 3 trade entry, right? And the reason why we have a 3 trade entry is because a lot of times as you start to gain a little more trading, you start to realize that things bounce all the time. So they always make a move and another move up and then down. And it's hard to gauge where people are going to panic and sell, especially when you have shorts. Shorts, you are quicker to do the move that you expect because it's easier to sell than it is to buy, right? So when you're buying, you definitely want to make sure that the RSIs are all in your favor, the 1 hour, the 30, the 15, because the momentum to bring volume to move a coin up is more, okay? Meaning that people have to buy, right? Now, when you think about it, a coin that's shorting, you don't have to go find people to sell their coin because they already, or people to sell it because they already bought it. You know how many people hold it. So the odds of them selling it is a lot higher than trying to find some people to buy it, right? So this is why when you come to a short, we have a step that we don't use that we use in a long. So to do a long, you have a 15-minute trade, right? Just like a short, you have a 15-minute trade on a long. The 15-minute long is a 15-minute moon, a 15-minute trend, and then you enter the trade on a 30-minute trend confirmation of the trade. So the notice of the trade is a 15-minute moon. The validation of the trade is a 15-minute trend. The trade is the 30-minute trade, is a 30-minute trend that validates the trade. 15-minute moon, 15-minute trend, 30-minute trend validates the move because it has enough pressure to give you better percentages of winning that trade, right? The short position is the same scenario. It's a 15-minute moon, a 15-minute trend, and then we don't need a 30-minute trend to take the short because the 30-minute trend, because shorts fall more than ups, it's easier to go down. You don't need to add the 30-minute trend to get your trade. You just need to have a 15-minute moon and a 15-minute trend, okay? Now, the reason why we have a 3 trade entry is because a lot of times when there should be bounces, there might not be, or when you think there won't be a bounce, there is a bounce. So you have to have the ability to have a second and a third trade that you can make to protect your position so that if you do get a reckless person like Wizard buying at the wrong time and forcing the price higher than it belongs, that you can protect that entry. And then if somebody FOMOs in because they think it's the bottom, you can get a third entry and then you can have the big dump. Because normally the people that don't sell in the first pullback, once there's a bounce, they'll sell in the next pullback, right? And this is a good example of Ches pushing up to the top. The people then sold their position. And then this area here is where most people will buy the pullback because they expect a bounce, which they get. And then once that bounce happens, the people that didn't sell on this move, take advantage of the bounce to get their money back and start to sell, right? And then you don't know in this section here how many people are going to FOMO in thinking that they're buying the bottom, trying to push the top, when these people here keep selling on top of them until their money disappears and we end up catching red trends, which means the volume is now not there, which causes this in turn the down move, right? So that's why there is one less step in shorting than there is longs, right? You skip the 30-minute trend to short. You just take a 15-minute moon, you enter on a 15-minute trend. And when you long, you need a 15-minute moon, a 15-minute trend, and then you enter on the 30-minute, right? So that's kind of like the basis of the trades that we take. Now, the reason why we have a 3-trade entry is to basically get us into trades when you have a decision to make or a in-between decision. And this is an actual perfect example. So when I review this trade, the first thing I want to do when he posts that he's doing a short is I just want to go see if there's a 15-minute moon for a short, right? The whole purpose of a short is he has to have a 15-minute moon, which he does. The other part of it is he needs a 15-minute trend, which he does. Now, the thing about this particular trade is this trade actually activated a while back, and it happened right here. So you ended up with a 15-minute moon way back here, and then the 15-minute trade came in, which caused this little pullback here. Then there was a bounce, right? Now this bounce was bigger than normal, right? Because volume is coming in. The 15-minute RSI is at the bottom, right? So the one thing to kind of protect yourself when you first get into a trade is you do not trade against your 15-minute and your 30-minute RSIs, and the 1 hour is your bigger time. You want that in your favor. So in this particular first trade, you have a 15-minute moon. By the time the trade comes along with a trend, notice that the 15-minute RSI, right, I'm going to mark this off real quick. This is where we have a trend, but notice how the RSI at that time is actually at the bottom, right? Now, we're going to take a look here. I'm going to turn this pink real quick so we can find it. And what I want to do here is kind of like review where all the RSIs there so you can kind of understand it. This time, I wouldn't take that short because the 15-minute is at the bottom, and I wouldn't take it because the 30 minutes are already at the bottom. And what you're using your RSI for is determining how much momentum or how much movement it has heading in that direction. Now, the good thing about that short is that does have the 1 hour headed down at that time, which basically lets us know that we're in a safe position to short. Now we just need to, be patient to let the 15-minute reset itself, right? Or to show push to the top, and then we want to take advantage of that next trade in there. Now, this is also a good example of when you get into a trade, if it goes against where you were setting up, right? So for instance, this is this trade that you would take here, and let's say the trend comes in and you get in at this level here, right? And you find yourself in a position where you get in and it doesn't fall as much as you thought because you didn't realize the 15-minute RSI was, at the bottom, and it didn't continue for you, and you ended up in this little tough situation here. So that normally will cause a pullback or a bounce. Now, normally what you're set up to do is that when the 15-minute RSI pulls up and you get to a situation where your entry gets to a 30 or a 40% type stop loss scenario, right? You would take your second entry. So your entry would be based here, 15-minute moon, 15-minute trend. You don't realize that you're entering a trade with the 15-minute RSI at the bottom, which is, it's okay, right? It happens, right? Now, what happens from this point, it doesn't quite give you a 1% move, because remember, this also depends on the exchange, right? Because a lot of times the exchange will, it'll wick further than the chart says. So there is a good possibility here that more than likely you might have made your 1% on this move down, depending on which particular exchange you're on. But it does look like you do catch the winner right here. So it does look like we get a 1% win here, but let's just say it doesn't, right? Let's say that it bounces up and then it starts to head this direction. Now, we are set with a 40% stop loss or 50% stop loss, which would put us in a situation of about here, where that would be a normal stop loss situation for us. The thing about having your first entry, not getting your profits, and then all of a sudden the coin starts to move up on you. When your coin gets to the point of 40% or something in that area, that is where you would have a section where you would put your second trade in with 50% of what's the remaining bag. And what that does, it takes your 40% negative and it drops it down to 25 and allows you some space to, exist here, right? Now, the only time that I would look at this and say to myself in this position that I would try to save my bad move the first time is if I knew that the volume was below the zero line, right? But notice here that the volume on the 15-minute isn't below the zero line, which means it has more volume in it, right? So you have to learn to be conscious of what's happening with the volume to make the decision if you're going to take that second trade and try to save your bad entry or just accept that that was a bad entry. And when it almost got down to here, right? If you're paying attention to your trade, you should have moved your stop loss to 0 because it got above 20%, 25%. So in reality, when the stop loss came up, it should have actually triggered out right there. And you should have got out of this trade because what you didn't realize is the volume was too high. And then that forces higher push. Now this higher push would be a scenario where you're thinking to yourself that, this might be the area to grab a first entry because you can see the 15-minute RSI starts to head down there, right? That would be an okay scenario. This is a normal scenario that you would say, okay, my 15-minute RSI is pushing up. It's starting to bend down, right? And that's kind of in this section here. And once again, the thing that you're missing is the volume is not cooperating in this particular moment here, right? So you might get yourself into another trade here, maybe seeing that bend and say, okay, this is what I'm waiting for right here. And you end up in another bad situation that jumps on you again, right? And this is going to be a nice move to the top. And you could take a loss 2 times on this trade, right? And if you're looking at that and moving yourself properly, and you're saying, you know what, this thing has to go down after this giant ass pump. And you guys are going to find yourself in this situation many, many times when you first start out because it has to come down and you've already seen the move down. You're just waiting for the next push down, right? So let's say you get in there, make that mistake. You're like, all right, I thought it was going to push down right here, looked good, but somehow, Wizard came in and spent 50 grand on this coin and bumped it, right? So there you go. So it pumps up. Now at this scenario, you finally get your 15-minute RSI back to the top is where you want to be because with this amount of volume here, you need all the room to the downside on the 15-minute that you can muster in order to protect yourself from the mistake. So when you see here, you can see that the volume goes to the top, but it doesn't trigger any green moons. You see that? See how it just kind of goes flat there? And the minute that money line and the RS line start to head down together, that is the correct time to enter your trade when you have a ton of volume, would be somewhere in here. Because now you have allowed it to run its course of trying to break out, failing to break out, and the RSI has reached the top. And now at this point, that would be the right place to really look into this short position because now you've ran that cycle through, right? So this is where as you get better at learning volume, you need to allow that volume to try to kick up and you want to take the rejections, right? The non-moons and that 15-minute RSI coming down. So now when we look at the RSIs, the 15-minute is now heading down. Notice how the 30-minute bounced and it is now heading down. And now we go back to our 1 hour, and what are we going to see? We're going to see the rejection of the cross, and now it's heading down. So now we're in the best possible trifecta of the push up, and everything lines up, and now we can take this trade, right? It takes a little bit of patience to say, this is why we have the volume alerts, right? And this is kind of what we talk about. Let the volumes and RSIs, when your volume on your 15-minute is above your 0 line, you have to respect the RSI retest more because since there is volume, it has more odds to push up higher. So remember that. You can take this short RSI move down. If the volume was below 0, you can take this trade. This would have worked out for you. But since the volume wasn't below the 0, you just have to wait for it to top out because there's volume. You gotta. That's the correlation you got to start getting in your head, is that when there's more volume, I need higher confirmation. I need to let these scenarios play out further so that I can protect myself. Now you can get your first trade in. The second trade comes in on a bounce move, right? Which is the RSI coming down. It bounces here, pushes up. There's your second entry right here, right? Now you've got 2 entries and you take advantage of this beautiful trade here, right? That's how to work that trade over. Now let's get over to where he was. And I want to kind of cover the same scenario. And the reason why we started here is because he came in and took a 15-minute red moon here. Now notice he got a 15-minute green moon. It caused a pump. It did not get a trend, right? So when it pushed up, it pulled down. It didn't get a trend. And then it bounced again, right? Now we know that we're running into a scenario where we're going to get a short again. And he happens to get a red moon. That triggers another buy up here, or another entry here. He comes in a little bit later. He gets it on the second candle, but you can see the money line was pushing up and it starts to head down there. So it's not a bad entry at that point. And once again, as we look at our RSIs here, at this particular time, we take a quick peek at our 30. We can see it bending down is good. We take a look at our hour. Our hour at that time was coming up a little bit on us, wasn't fully involved with us. But the reason why it works here, right? Because you see how the 1 hour bounce there, and then it starts to flatten out. The reason why it works here is because if you look at the volume, when this moon came in, notice how the volume has now gone through the negative, fought to get up, and then in that particular 15-minute moon comes in, the volume is losing the fight. You see what I'm saying? So you can expect less of a fight against you because the volume is already broken down. Okay, once again, same moves, right? Volume comes down, volume bounces, then it comes down, right? So that's the play. Once you start understanding that everything makes its 2 moves, you'll be a lot more patient because you're waiting for that move to happen, right? So now we can take this 15-minute move with the 1 hour slightly going against us because the volume is negative. You see that negative volume right there? Now because of this negative volume, when I look at my 1 hour RSI and it's kind of like going against me over here, you can expect to take that move because it's showing you weakness already, right? So that's the beauty of it, is that it's showing you weakness in the volume, which is the difference between having to be patient over here and letting these RSIs play to the top versus over here. Once the RSI gets to the top and you get that 15-minute moon, you can take advantage of that, and the 1 hour is bouncing, but it's very weak. And that's where he can take advantage of that trade. And that's where the difference is in what he makes. Now, I want to cover the three entry play, right? And the reason why we have the 3 play entry is because you want to have at least a 40% entry into your bag. That way, if the trade does go the direction that you want it, you can at least claim 50% on your 40%, which is, a decent win. Or if it bounces on you and you get your second trade in, then you're claiming on that. But getting your first trade in is always critical because it allows you to, get your entry in and at least be in the trade and allow it to move in its position. So what we've been looking at is right now we have it at a 40 50-50 or 40-50-100 because when you enter a 40% and then your second entry is 50% of the entire bag, it's equivalent to 30% of the bag, right? So it's almost equal amount to your original first entry, which if you're in a bad position, right, it protects you by taking you back down from a 40% negative to 25, gives you room to survive. Now, as you get better, those percentages will change. and we will increase the percentages up to 60% on our first entry, and then we would enter 50% or 60% on our second entry, right? And that's because once you get better at entering properly, then you can risk more on the first entry, right? So that'll come as we continue to review trades. Here, Decline is showing tremendous progress here, really doing a phenomenal job here. So posting correctly, putting his reads in there, following up on his trades. I mean, he is obviously, we're witnessing it right now. He's doing very well at hitting his trades, but this is kind of like understanding where volume comes in and where you can, get in on the pullbacks of their smaller bounces on the 15. But in volume situations, don't fall for the fake outs. Okay, don't get overzealous. Let the 15 get to the top. Let the volume reject a few times and show you that it doesn't want to break. And then when it gives up, take advantage of that move there. Okay. So I hope that makes sense, man. Other than that, good job, Decline. Phenomenal trade there. Obviously, hit your number there. So now, before I get out of the video, is there anybody have any questions on that, or do you guys understand, like, as we go through there? Because what I want to do here is just kind of like, make sure that we're making short, quick videos of reviews, but also touching base with everyone who's kind of there. Does that make sense for you guys, understanding that, once you realize where the volume is, you have to respect the guidelines a lot more when the volume's high. You could take more chances when the volume is low, right? And the 3 trade entry set up to allow you to get into trades and take chances with an extra trade to protect yourself. All right. So does that make sense to everybody? Is that pretty explanatory? Or what have you? Is there anything on these videos when we do the 10 trade reviews? Is there anything that doesn't like make sense or line up? Right. And I'll kind of throw this in on the one thing that we looked at is to make the second entry a lot easier. Just like all entries when you enter a coin, what we're doing is when there's a bounce or anything like that, you would actually take your entry on your 3-minute green moon and green trend. Like, so for instance, over here, kind of give you an ideal of how to protect. So you had a couple of scenarios that you could have had an entry and there was second entries that were coming in. The thing that we've been noticing is that, when you're on an entry, all entries are, you want to clarify your entry with sliding to the 3-minute. The 3-minute moon and trend should mirror your decision, right? So if you are entering this particular trade and you're getting in here, you should have a moon and a trend that equal that trade. If you're getting into a trade in this section here and you have a green moon and a red trend and you're trying to enter here, then you would basically wait for the red moon to come in and basically work with you. So that's kind of something, if you're getting a bounce on a trade and you want to buy that bounce, you want to make sure that you're buying it at least when the moon goes back to the color that you are entering, like a short. You don't want to trade against your 3 minutes. So anybody in the Discord, as far as like understanding it and so forth. So like so Dina, do you you're coming in fresh. So does that make like sense for you when we kind of cover it like that?
Yeah, definitely. I've watched it a couple of times. I'm still trying to get like good like the entry point, so like red
Mhm.
moon, whatever. And then sorry, it's starting to
Yeah, we just, there's only so much, you want to take steps in what you're doing. So we just want to get it to where when we cover the trade review and we do a breakdown of where the earlier trades or the original trade would have happened, and then cover where the trade that was taken, why it was taken, the entries that were taken,
right.
how each of the 2 entries or the 3 entries would have worked in the scenario, and how to realize if you're just in a bad trade, how to, um, kind of take, it's kind of like poker, right? Poker is all about, it's really not about the cards. It's about, losing. When you lose the little amounts, and when you win, take it all, right? So it's always about making sure
Right.
that if you take a loss, that you're not taking the biggest loss. that you're like, oh, I made a mistake. I'm moving my stop losses. Okay. All right, let me get out of here. Let me reset. Because a lot of times guys will be in really good trades and they'll get stopped out and they don't follow back in. And the trade ends up going huge, right? And it's like once you hunt a trade down and you're in those, you got everything that you want that says this is my trade, even if people are coming in and upsetting the parameters of it, ride them out because they're not going to, win the scenario, right? They're just buying at the wrong time. You got to say to yourself, there's going to be bad investors here, bad traders every once in a while. I'm gonna catch these guys who are buying at the wrong time, and then you just continue with your process and just move to the next entry and then work on that next one and then get your profits back on that next move because it will be bigger than the 50 because now it has momentum to it, right? So that's why I really wanted just to touch
What?
base. Go ahead.
Yeah, I was gonna say the breakdown you just gave of like the 1, 2, 3, because I was kind of like, why would you put 3 trades in? Like,
Mhm.
yeah, I guess dollar cost average to some extent, but on a short trade, so or on on a day trade, I was like, I didn't really get that, but now the way you explained it, as far as like, it's kind of like your safety net. So if you get in at the
Mhm.
wrong time in that second trade, you're able to like, kind of play with that and make the first
Mhm.
one not suck.
Yeah, and
So it makes sense that you put it that way.
exactly. And really what it is it's kind of like this because let's say you're doing your whole I mean and the funny part is that we tell everyone start with $10. And the reason why we do that is so that you can put $10 in and not be like emotionally connected to it, right? But then what happens
Right.
is they're trying to get a perfect entry. So they don't put the entry in because they're like, all right, well, okay, I'm going to wait for this, right? And they become too analytical, right? So when we did the 3 trade entry so that the first part of your entry you can be a little more free spirited, right? It's okay to make a mistake, but you're never gonna the first part of like the first 6 weeks is really to get through the emotional attachment of the trade. You know what I mean? Like you don't want to get into a trade and then
Yeah.
be like, oh yeah, let me get out of it. I didn't feel that, right? You you want to be systematic. Like, okay, why are you entering? Okay, where is your entry? A, B, and C. Place your order. Place your stop losses. Record your order. Watch what happens. Right? That's just how it goes. And your entire thing is to do 10 trades and then go back and go, how did I do? Right? There's guys that make 10 trades who think they did terrible, and then when they're done, they're like, "Oh, I'm up 300%," but they didn't know
Yeah.
because they're so used to doing one trade, going, "Oh, I lost 10%. Oh, I lost 50. Oh, I won. Oh," they don't know because they're like living trade to trade, right? It's kind of like that's not the part. You have to let go of the the attachment to it, right? And that's when once we get through this process here with this group, then we'll be kind of like moving more pace forward. But that's the first thing. So the reason why we do the 40% is just so that you can be like, all right, I got a $10 trade. I'm putting 40% in. Let's go. All right. If I lose 40% and I hit a 50% stop loss, it's technically only 20% of your entire bag. So you didn't really lose
Right.
50%. You lost 20, which
Funny.
you
Yeah,
can
that
do
makes more
5 times.
sense.
Yeah, you can do 5 times and it was just one $10, right? You see what I'm saying? It was one bag.
Yeah.
Right? So now you can at least start seeing what you're doing wrong and going, oh, okay, I didn't do that. Okay, I forgot to set my stop loss. Oh, I didn't set my profits. You got to get the mechanicals down first, right? You got to get through the process
Right.
of, okay, hit this, hit this, hit this, right? So enter a trade, go over here, set my stop loss, set my profit, record my entry, go to Discord, put it in the 10 trade, post it, come back. My trade is going perfect. Look for the bounce, second entry opportunity, waiting, right? That's the process, right? So now you can do that with not having all your eggs out there and feeling the pressure of it, right? Now, what we do is once you become a person who is executing trades properly, like Decline is, his eventually he's gonna. We're talking about boot camp. He's gonna end up going to boot camp, but what he's going to be doing is his
Yeah.
first entry instead of being 40% will move to 60, right? Because now he's starting to get his entries correct, right? And now the second entry point would be, more in the 60% level because we want to be able to offset a 20 or 30% negative by at least 30 to 40%, right? But he has less and less of those situations because his entries are so good, So now he can put 60% of his bag into the first trade, and that will normally 7 out of 10 times hit the 50% before it bounces, right? Now, the reason why we focus on percentages is because the money is something that doesn't matter, because right now you're working on just making orders. It's $10, $20. But as you continue to win trades, you're increasing your bags. And as you increase your bags, 40% goes from $4 to $8, from $8 to 16, from 16 to 32, right? And so on and so on. And then you start doing 60% bags, and now your $38 order is now a $60 order, right? And then that becomes a $120 order and a $240 order as you continue to move on with your process, right? So eventually you might have $1,000 bag and you put 600 of it in, 60%, and you get 50% of that. I mean, you're not going to be mad at making $300 on your trade, because if you can master 7 of those trades, well, then you're making 100 grand a year, right? So that's why we always focus on percentages and how to, win 7 out of 10 trades and collect a certain amount of percentage at the end of the day, right? So that is what the key is, and because then we don't get emotionally attached, and we just make trades, right? Now, what a lot of guys do is they make a mistake is they don't increase your bag. So what you're supposed to do is every time you 3x your bag or have a four, you want to have 4 bags, right? So guys will ask me, all right, how do I start trading? And I say, well, how much where are you at? So if you normally start with $50, then you have 5 $10 bags, which means you can blow a bag, replace it with another one, blow a bag, replace it with another one, then start winning, bring back those bags, right? And once you get to 4 bags again, you then say, oh, I understand how to do this. Now you take your $10 bag, right? And you build up your safety bags, and those you put the profits over there, and you have $40 extra in profits. Now you're at $90. Now you double your $10 to 20. And now you repeat it, because now you need to make 20, 40, 60, $80 in profits, and then you double your $20 bag to 40, right? And you keep hitting 4X's, right? You have to build 4 bags, and then you take one of the bags and add it to your bag, right? Until you get to like $100 mark. And then after 100, you start adding 50 at a time. So you do 400 in profits, add 50 to your bag, you're at 150. 400 profits, 50 to your bag, you're at 200, right? 800 profits, 50 to your bag, you're at 250. And that's how you continue to move along without being emotionally connected to the amount of money you're entering. The mistake people make are they go, well, I'm just going to keep trading $50. And they do that for 6 weeks and they turn it into 3,000. And then all of a sudden they're like, you know what? I'm doing $1,000. And they go into a trade and that $1,000 goes negative by 20% and they panic sell. Because they're like, shit, I'm not losing 300 on this trade. But then the trade does what it's supposed to do, and they're like, damn, I could have won, right? And now they're emotional because now the money is so high that they've reset their tolerance. That's why you have to just add the profits as you go. You can't just keep winning $50 trades and then say, all right, I'm trading 500. Right? Because now you're just like freaking out because
never get anywhere.
Yeah, it's you now, instead of it goes down negative 20%, you're not down $10. Now you're negative 20% on 500. You know what I mean? So that's where the difference is. Now it's like, all right, I'm 100 down now. It's a big different than $10, right? So it makes you now you're overthinking it. You just follow your process, add gradually, and just keep compounding your money. Right? And then 60% on that, 60% on that. And you just keep doing what you do good, right? You just keep, notching your entries and so forth. And then your entries, your 1 and 2 entries, we just increase those percentages based on your ability to make good entries. That's why the system is set up that way, is to deal with your emotions and your anxieties so that we can, place it into a good spot there. Other than that,